Morning with Adrian Mowat of JP Morgan, who says that the market will move higher if earnings growth are strong. He was a guest editor for the day. And in an exclusive conversation with CNBC TV 18, Adrian also says that the Indian market is likely to maintain the current levels of valuation.
Our view is that the market should probably go up with the earnings growth numbers. We're going to be getting the results for fiscal year 17. I think they'll be relatively pedestrian, single-digit, high single-digit growth. The question is, what do we achieve in fiscal 18? And I think that's where we've got some guests on from the real estate sector, from the banking sector, and these are the areas where we're going to need to see activity pick up, particularly in the banking sector when it comes to corporate loans, which have been quite disappointing. And then we've also had the distortion of the final quarter of last year, the calendar year, with demonetization, and how does that come back? And it's a very interesting dynamic because, if you look at India for the first quarter in terms of stock market performance and some of the data points, it looks very strong, but remember we're comparing that to a weaker base in the final quarter of last calendar year. So it's a very interesting dynamic at the moment. I
take your point about loan growth. I mean, I was reading some reports which suggested that average loan growth now for banks has fallen to less than 5% post demonetization. So, that's a scary internal. Emerging markets after a long time have come out of a funk. This year, at least, they've started to perform, deliver some returns. Why do you think that is? And what would your view be between developed and emerging markets for the rest of the year?
So I with respect, describe my clients as growth tourists. So they sit in London, New York, Tokyo, and they buy emerging market equities for premium earnings per share growth. It's not really about GDP growth, etc. You've got to deliver premium earnings growth if you're an equity. And from 2011 to 2015, the EPS integer for EM fell. Developed markets were delivering premium EPS growth. They were actually delivering EPS growth, I should say. In 2016, that was the first year in 5 that emerging market equities delivered premium earnings per share growth. And for this year, again, we're delivering the same thing. And the positioning is extremely bearish by the global asset allocators in emerging markets because they had 5 years of underperformance. So the core fundamental of premium earnings per share growth is now in place.